Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss France's trade in YY. All right, Franz, well, please walk us through this trade.
Okay. Well, hello, Roman, and hello, everybody. YY, it's now called Joy, Joyy Inc. It's a Chinese internet company. Had a nice rally into June of last year. Just sort of ran out of momentum. Didn't have any, significant kind of sort of selling climax. It was more just like an exhaustion. And we can see that from about the middle of June of last year through about, I don't know, the early part of this year, it was in a nice trading range, pretty well defined. One of the things that was a bit of a cautionary kind of note was in the middle of November, there's that one really large selling bar, but it might be one of those, and it turned out to be one of those looks bearish, acts bullish, because in spite of that, the large spread, the large volume, it really wasn't able to, to undercut the lows of the trading range, the support of the trading range, and you can see a little demand tail that came in at the end, and then the next day, no continuation whatsoever. So it was tested towards the end of December, and then had a nice run up and I think you'd call that initially anyway, that December 28th period is phase C, a big sign of strength rally, and that rally, then you can see there's this obvious change of behavior around February 22nd that tells you that this rally's done. So, what happens after a sign of strength rally out of a trading range, backing up action, and the backing up action continued for a couple months. No real sign of supply coming in. You can see there around March the 15th to the 22nd, price drops, but there's just, like selling looks like it's done. So I'm thinking that that's probably a good place. Maybe if this is backing up action, maybe it's done, good place to enter. And I think my point of entry there on April 5th at around 98 was where I got in right after the, kind of the test and the attempt to spring off of that horizontal dotted green line is sort of looks like an obvious plateau of some support there. So I'm thinking, well, that's a spring. We're going to go back up, and it tested once around April 19th. So I'm thinking, okay, well, it's going to test, that's fine. But then look what happened after that. The test is just a complete failure, and down and takes out my stop. So that's sort of the anatomy of this, and I'd look forward to what your analysis might help us all to understand about what happened here.
Mm-hmm. Well, I definitely like how this rally unfolded, right? So we are overcoming the resistance cluster, and we are traveling much higher away from the resistance. So that usually shows strength, and that's why it's called a sign of strength. That usually shows some buying. It's really hard to see the volume signature, or the volume increase rather, just because of this spike here. But there is an increase in the demand here. So they are buying right here. So you want to see the backing up action come to this area right here. So I think that this green rectangular identified correctly as to where they are starting to aggressively buy. So this whole thing. So you want the backup to come to this level, maybe like, to even touch the support and stay there. So the key there is just to stay, right? So the key is just to consolidate and then resume the uptrend. with some kind of signal as a confirmation that now we're in the upswing. So that's kind of like the key. So what are we missing here? During the backup action, right? So when the price goes to, let's say, initial low into, let's say, the support, what's the logic and rationale of the price going up from here? So there is some value proposition to institutional hands as they're seeing a short-term oversold condition. And with that short-term oversold condition, they start buying. So if institutions are starting to buy, then we have to have a pretty good rally. We have to at least come close to the stopping action of the sign of strength rally. That's number one. In some instances, it's even better to see a higher high as a minus sign of strength in the backing up action, and then come back to the retest as a higher low, something like this. So this would be a much more bullish pattern. Here we're seeing that some buying is coming in. We see this in the demand tail. Test happens, and then we just basically fail on this last bar to the downside. Then another low as a minus sign of weakness, and another attempt to do the same, and another failure on the gap down. So there's a lot of this kind of like bearish look, bearish characteristics to the backing up action if we're thinking that this is a backup. Another rule here for us is to think that if the backup is going to fail, then we want to get out if we are in the position and we don't want to participate. So for instance, maybe the price goes up and then it starts to fail. So somewhere here on the failure, this would be our exit or non-entry. Just because we don't see a lot of bullish character on the backup, and then we see that structural failure. And that structural failure comes right here, right after those characteristics that are not that great for the backing up action. They are not that bullish. They are more like bearish. Poor buying and rejection, and then failure. So if you would take all of this into the account, then the whole entry point that we have here is a little bit questionable. Questionable from, like, we don't see the change of behavior from, let's say, a bearish behavior to bullish behavior yet. So we would have to wait for the test and then some kind of change of behavior that would at least confirm, let's say, a proper breakout. So I would probably place my point of entry right here if I'm thinking that it's going to go up. So more of the confirmatory point of entry after bearish behavior rather than going there right away. So this is kind of like my initial thoughts, Franz.
Yeah, wow, there's a lot of wisdom in that. Yeah, one of the things that we were talking about in WTC is when we're looking at a trading range, what is leading us into that trading range? Is it a bullish or is it an uptrend or a downtrend? Is it bullish or bearish? And I think here, especially after having you just gone through how this backing up action is performing, we've got a downtrend off of the top there, and we're going into this little trading range from out of a downtrend. So our initial assumption should be that this is a redistribution to be confirmed or fail, not some sort of continued backing up action, which is the way I was interpreting it. So that's my takeaway.
Mm-hmm. Yeah, okay. Well, let's go through the post-analysis. So bias.
No,
not
okay. After what I just said.
Timing.
Yeah, using your idea of a confirmatory entry, then the timing would be no. Although
I would say probably 50-50. I mean, like we're still entering here after the reversal, right? So the reaction and then the reversal. That's what we want to see. So let's just put 50-50.
okay, character no.
Character no. Point of entry 50-50. Stop loss yes. Add-ons not applicable. And exit yes. Again, exit, is yes. Why? Because we want to exit by the rules. What is our rule here? It's a stop loss. Did we exit at the stop loss? Yes, we did. So this is yes. So we have what? 4, right?
1, 2, 3 out of 6, right?
3, yeah, 3
So
out
it's
of
50.
6, so 50%. Okay, so comments here are character of the backing up action. That's number 1. Not just the character of the backing up action here, but it's also waiting for the change of behavior. Waiting for change of behavior after this leg down. So we needed to see some kind of confirmatory behavior, something like this. Okay, what else, Franz?
I think that's great, and I'm going to go back and replay this myself just to pick up the knowledge that you just gave us in terms of how you read a backing up action, because it's one of these things that structurally, well, it looks like backing up action, but you get in and you look at the nuances and you say, oh, okay, well now, yeah, I see something completely different from just the, the 30,000 foot, bird's eye view of what's happening here.
Mm-hmm.
So.
And I think again the key that there is a tendency with Wyckoff students to kind of think more about the structure itself, right? So okay, so if you're looking at the structure, then you should not have this break after support in the backup has been formed. Even if it would be a spring in the structure, it would go like this. It would go down and then it would recover. So then that would be a different story. But it definitely breaks to the downside too much. So that's just a structural thing. But then also the character itself, right? So the character and the structure, that's what was so important. And then once the structure is broken, then wait for confirmation, wait for the change of behavior. Because at this point, after the break, then we are, as Franz said, in the downtrending bias. Okay, well, Franz, thank you so much. And as usual, thank you guys for watching. Until next week.
Thanks, Vermont. Another great lesson.